Welcome to the deep dive. Today we're really digging into Intel, a semiconductor giant, no doubt, but one that's definitely standing at a critical turning point.
Absolutely. Pivotal is probably the right word.
Yeah. We've pulled together a lot of source material, financials, industry reports, you name it, and our mission today is pretty clear: to figure out if Intel is truly staging a major comeback or if, this is maybe just a temporary upswing.
And it matters, right? For investors, for anyone in tech, or even just curious about where these huge companies are headed.
Exactly. We want to cut through the noise, pull out the key insights from these sources, and really get a handle on the likelihood of this resurgence. What are the make or break factors?
It's complex. Intel has such a long history, and there are just so many forces acting on it right now.
For sure. And we have to remember the backdrop here, a 70% stock price drop between April 2021 and November 2024. That's a deep hole.
That really frames the challenge, doesn't it?
Right.
It highlights the urgency behind everything they're doing now.
And maybe what makes this turnaround attempt different is this unique mix of things happening all at once. You've got huge government support, the CHPS Act.
Right. Unprecedented, really.
Then there's the whole AI explosion, this massive market opportunity.
You'd ignore that.
And new leadership, Lip-Bu Tan taking over from Pat Gelsinger. That's a significant shift.
It absolutely is a different perspective at the helm.
Okay, so let's dive in. Let's start with that government support, the CHPS Act. How big a deal is this, really?
It's a massive tailwind, no question. We're talking about potentially up to $7.86 billion in direct funding from the Commerce Department, plus another $3 billion contract specifically for their Secure Enclave program.
Wow. Okay, that's serious money flowing directly into their domestic manufacturing plans.
Exactly. And on top of the direct funding, there's also a 25% investment tax credit they can claim.
Ah, okay, so it's a layered incentive.
Precisely. And this is all supporting Intel's plan to invest, get this, over $100 billion in the U.S. We're seeing major projects announced or underway in places like Arizona, New Mexico, Ohio, Oregon.
So this is bigger than just Intel's bottom line, isn't it? There are national implications here. Jobs, supply chain.
Absolutely. The projections talk about tens of thousands of jobs, both direct and indirect. It's about building a more resilient semiconductor supply chain right here in the U.S., strengthening R&D.
And presumably, national security plays a big role, reducing reliance on, say, Taiwan.
That's a key driver, definitely. Reducing dependence on foreign manufacturing for these critical chips is a major national security interest behind the whole CHPS Act initiative.
Makes sense. But, okay, billions from the government, tax credits. It sounds great, but it can't guarantee success, can it? It helps, but it doesn't solve everything.
That's the crucial caveat. It's substantial support, but it's still only a fraction of Intel's total planned spending. Success ultimately hinges on their execution.
Execution meaning?
Meaning delivering on their technology roadmap, especially those next-gen manufacturing processes, the 18A and 14A nodes. They have to get those right, make them competitive. The funding helps. It de-risks things a bit, but it doesn't build the fabs or perfect the yields for them.
Right. It's like a down payment, but they still have to build the house and make sure it's, livable.
Exactly. And there's another layer of risk, too.
Which is?
Political risk. Government policies can change, right? Future administrations might view these subsidies differently.
Yeah. The long-term stability of that support isn't totally guaranteed.
Our sources mention potential shifts, things like tariffs or even cuts to subsidies down the line.
Yeah.
If that happened, it would definitely impact Intel's long-term planning, which relies heavily on this government partnership.
Okay, so CHPS Act.
Yeah.
Vital, helpful, but not a silver bullet. Depends on execution and some political stability. Let's shift to leadership then. Lip-Bu Tan replacing Pat Gelsinger. What's the thinking there?
Well, it signals, I think, a desire for maybe a faster, more decisive approach. Gelsinger had this vision, IDM 2.0, catching up to TSMC, but maybe there were concerns about the pace, the cost.
And Tan came in with some pretty strong words, didn't he?
He did, calling Intel too slow, too complex, and too set in our ways.
Oh.
That's pretty direct. It suggests a real perceived need for a shakeup.
So what are his main priorities? What's the new game plan?
It looks like a few key pillars. First, really strengthening core engineering. Second, pushing hard on CPUs that integrate AI capabilities. That's critical now. Third, aggressively expanding the foundry business, IFS. And fourth, simplifying things internally, cutting bureaucracy.
And we're seeing action already, right? It's not just talk. Big restructuring.
Oh, yes. Significant workforce reduction, about 20% over 21,000 roles. That's substantial.
Wow.
The target is $1.5 billion in annual savings by 2025. And they have targets to cut operating expenses further in the following years, too.
Beyond the job cuts.
Yeah, they've revamped the leadership structure. More direct reporting lines to Tan, new CTO, a new dedicated AI officer. It seems aimed at flattening the organization, increasing accountability.
And what about inside the company? The culture, any changes there?
Seems like it. More emphasis on being back in the office, fewer meetings, maybe less focus on some internal processes like OKRs, reducing admin work. The message seems to be about focusing on output.
Output with fewer people, potentially. Changing manager KPIs, too.
Right. Focusing more on what teams deliver, not just how many people report to a manager. Feels like a back-to-basics approach.
Right, back to basics, but maybe with a harder edge. More focus on efficiency, cost-cutting engineering first.
I think that's a fair assessment. While the big goals foundry, AI, and CPUs might be similar to Gelsinger's, Tan's approach seems more focused on immediate efficiency gains, trimming the fat, and really driving that engineering culture. Less red tape.
But that kind of sharp cost-cutting, it's necessary for the financials, especially with negative cash flow, but it has risks, doesn't it?
It's definitely a double-edged sword. You need the savings to invest to get financially healthy, but cut too deep or in the wrong places, and you risk hitting morale hard.
Losing key people, stifling innovation.
Exactly. Execution is already Intel's biggest challenge. If the cuts undermine their ability to deliver on that complex tech roadmap, it could backfire. It's a very, very tricky balance.
Okay, so GTPS provides resources, new leadership brings urgency and cost focus. Let's talk about the centerpiece, really. Intel Foundry Services, IFS, this feels like the biggest bet of all.
It absolutely is. It's the most ambitious part of the whole turnaround. Their goal is huge. Become the #2 external foundry globally by 2030.
Number 2. Behind TSMC, presumably.
Right. Targeting about $15 billion in external revenue by then. And a key part of this is separating their design and manufacturing arms internally.
To build trust, right. So potential customers who compete with Intel's chip designs feel comfortable using Intel's fabs.
Precisely. Establishing that neutrality is crucial. It also perhaps keeps options open for a future spinoff, though that's speculation. But central to IFS is their tech roadmap, that 5 nodes in 4 years plan.
Which sounds incredibly fast. Are they actually hitting that?
Remarkably, it seems they are on track to complete the 5N4Y goal by the end of this year, 2024. That's a big symbolic win.
Okay, what does that roadmap look like in practice? What are the key nodes?
Well, Intel 3 and Intel 4 are basically manufacturing ready now. Then comes Intel 20A, launching later this year. That's a big one, introduces ribbon-fed transistors, which is their take on gate-all-around.
A new transistor structure for better performance and power.
Exactly. And power via delivering power from the back of the chip. Also very innovative. Then the really critical one is Intel 18A.
Why is 18A so critical?
It's expected to be manufacturing ready later this year, volume in 2025.
Mm-hmm.
It also uses ribbon-fed and power via. This is the node that really needs to compete head-to-head with TSMC's N2, N3 processes. It's seen as the make-or-break node for regaining process leadership.
And they have variations planned too.
Yeah, 18AP for performance, 18APT using advanced packaging. And looking further out, Intel 14A around late 2026 using next-gen high-NA EUV lithography. Plus, they're working on older nodes too, 16nm, even a 12nm partnership with UMC.
It's a blizzard of node names and tech, but the message is clear. They are pushing extremely hard on the accelerator for manufacturing tech.
No doubt about it.
But having the tech is one thing, getting customers is another, especially when you're competing with giants. How are they doing on that front? Any big wins?
They've announced some very significant ones.
Yeah.
AWS Amazon Web Services signed a multi-year deal. They'll use Intel 18A for an AI chip, Intel 3 for a custom Xeon server chip. That's a huge validation.
Wow, AWS is massive. Anyone else?
Microsoft. A reported $15 billion commitment to use Intel 18A for a future chip design. That's another enormous vote of confidence.
Okay, those are heavy hitters.
And reports suggest NVIDIA, Broadcom, AMD are all evaluating 18A. We saw execs from MediaTek, Qualcomm at their Foundry event, so the interest seems widespread.
But the market share picture is still daunting, right? TSMC is dominant.
Absolutely.
Yeah.
TSMC has, around 65% market share. Samsung is number 2 with maybe 9–10%. Intel Foundry isn't even in the top 10 currently.
So closing that gap is a monumental task.
Monumental. It requires flawless execution, not just on the tech, but on service, reliability, pricing, building trust. The execution challenge is immense.
And Intel talks about being a systems foundry, not just making wafers. What does that mean? Is that their differentiator?
That's a key part of their pitch. leveraging their strengths in advanced packaging, things like Foveros, EMIB, to connect different chiplets together in innovative ways.
Chiplets being smaller, specialized chips.
Right, so they can offer customers more than just manufacturing a single chip. They can help integrate multiple chiplets, potentially from different designers or foundries, into a powerful system using Intel's packaging tech. It plays to their IDM history.
Interesting, like offering the whole package, literally.
It's sort of, yeah, but it's also more complex to manage. And all of this, the R&D, the fabs, the packaging, costs an absolute fortune.
What kind of money are we talking?
CapEx this year is around $20 billion. They have over $50 billion in construction projects ongoing.
Yeah.
And they don't expect IFS to even break even until 2027, maybe later.
Yikes. So huge upfront investment, long road to profitability, lots of pressure on the rest of the business to carry that load.
Exactly. Massive pressure on overall profitability and cash flow for the next few years.
Okay, IFS is clearly a massive long-term bet. Let's look at their traditional bread and butter, their own chip products. How's the client computing group doing? PCs, laptops?
It's been a bit mixed recently. Q1 2025 revenue was actually down year over year. They mentioned competition, maybe some shift to older chips by customers.
What's the roadmap look like for client CPUs?
We had Meteor Lake late last year, first tile-based chip, AI NPU on Intel 4. Coming up is Lunar Lake, focused on extreme power efficiency, actually made by TSMC.
Made by TSMC. Interesting.
Yeah, and Arrow Lake 2, the desktop version, late this year is TSMC, laptop next year on Intel 20A. And then the big one is Panther Lake, maybe late 2025 or early 2026. That's planned for their own Intel 18A process.
So outsourcing some key chips like Lunar Lake and parts of Arrow Lake to your main foundry competitor, that says something, doesn't it?
It's pragmatic. Get competitive products out the door quickly, fight AMD, fight ARM. But yes, it implicitly acknowledges their own manufacturing wasn't ready or competitive enough for those specific timelines or products.
So Panther Lake on 18A is the real test for their own manufacturing comeback in client chips.
Absolutely. That's when they need to prove they're back on track with their own fabs for high-volume, leading-edge client products.
And what about this whole AI PC push? Intel's talking big numbers, over 100 million units. Is that taking off?
The projections are ambitious, but reports suggest actual demand has maybe been a bit softer than hoped for so far.
Why is that?
It seems the market is still waiting for those killer apps. Software that really makes you need that on-device AI capability. Right now, it feels a bit like the hardware is ahead of the mainstream software use cases.
Okay. What about the data center? DCAI Group. Huge market, fierce competition.
Right. They actually saw some revenue growth in Q1, which is positive. Their roadmap includes Sapphire Rapids, Emerald Rapids recently launched. Coming soon are Granite Rapids with the performance cores.
IP cores, yeah.
And Sierra Forest with the efficiency cores, the E-cores using Intel 3. That one has up to 288 cores.
Wow. But I heard Granite Rapids saw some price cuts. And wasn't there a delay for the 18A server chip?
Yeah, reports suggest they're being quite aggressive on pricing with Granite Rapids, likely due to strong competition from AMD. Seems like a share over margin strategy for now.
All right.
And yes, Clearwater Forest, the E-core chip planned for 18A, has been pushed back to 2026. Packaging complexity was cited.
Okay, so challenges there too. Now, AI accelerators, the Gaudi line, NVIDIA territory. How's Intel doing there?
They're making a determined push with Gaudi 3. Shipping later this year, targeting $500 million in sales. It's aimed squarely at generative AI. Specs look decent. Some benchmarks show good cost efficiency compared to NVIDIA's H100 on certain models like Llama 3.
But there have been criticisms of Gaudi, right? And what happened to Falcon Shores?
Yeah, some criticism about the architecture maybe being less flexible than GPUs for some novel AI tasks. And Falcon Shores, yeah, that's been pivoted. It's not going to be a commercial product now, more of an internal test chip.
So what's the plan instead?
The focus shifted to something called Jaguar Shores. It's pitched as a rack-level AI solution for data centers, focusing on cost and power efficiency. It seems like an attempt to find a different angle to compete with NVIDIA, rather than just a direct chip-to-chip fight they might struggle to win right now.
A more system-level approach. Okay, what about the really long-term future stuff?
Analog AI.
Neuromorphic.
Quantum.
Any near-term impact?
Probably not much near-term impact on the bottom line. Analog AI is mostly research, exploring theoretical power benefits. Neuromorphic, they have the Louis He 2 chip, which is impressive tech.
Based on how the brain works? Sort of.
Kinda, yeah. Spiking neural networks. But it's still a research chip. Commercial viability is a ways off. Needs more hardware, software, ecosystem development. Quantum. They're working on silicon spin qubits, leveraging their manufacturing strengths. They have research chips like tunnel falls, a software kit.
But they themselves say commercial quantum is still far out.
Yeah, their estimate is 10, 15 years. So fascinating R&D, important for the long run, but not driving the turnaround today.
Got it. What about other diversification? Discrete GPUs, ARC, Mobileye, IoT.
Our GPU's Alchemist, the first gen, had mixed reviews. Battle Mage, the next gen coming in 2025, is expected to be a big improvement, targeting mid to high tier. Celestial after that aims for the high-end enthusiast market.
So progress, but still catching up to NVIDIA and AMD in GPUs.
Mobileye is a leader in ADAS, camera-based systems. Strong growth, lots of design wins. But since the IPO, Intel retains a stake. But its impact on Intel's core turnaround is maybe more indirect now.
Okay, and IoT Edge.
Huge potential market. Intel's strategy is providing the processors, FPGAs, software tools like OpenVINO, Getty, building partnerships. They have products like Core Ultra, Atom, FPGAs, Movidius VPUs. It's about enabling AI inference out at the edge, in factories, retail, etc. Partnerships are key there.
Okay, a lot going on across the board. Let's circle back to the financials. How does the picture look right now? Valuation analyst views.
Well, the recent results, as we touched on, show a company mid-transformation. Q1 revenue flat, GAAP loss per share, though adjusted EPS was positive. Gross margins declined, negative adjusted free cash flow.
And the outlook wasn't great either.
The Q2 forecast was cautious, below expectations, maybe another loss per share. So financially, it's still tough. Analyst sentiment reflects this, mostly hold ratings.
Meaning wait and see.
Pretty much. Price targets vary wildly, showing the uncertainty. Projections generally see revenue dipping this year, 2025, then growing in 2026. EPS hopefully turns positive overall in 2026, with stronger growth in 2027 if things go to plan.
And that difference between GAAP and adjusted EPS, that's mainly the restructuring costs hitting the official GAAP numbers.
Primarily, yes. Restructuring charges, asset write-downs, foundry investment impacts. Adjusted figures try to show the underlying operational performance, but the GAAP numbers reflect the real cost of this transformation right now. It's the J-curve recovery narrative. Things get worse before they hopefully get better.
How does Intel's valuation look next to, say, AMD, NVIDIA, TSMC?
Generally, Intel trades at lower multiples, PE, forward PE, price to sales.
Meaning it looks cheaper.
On the surface, yes. But that reflects the challenges, right? Market share erosion in CPUs, still proving itself in foundry and AI, the execution risks we've talked about. NVIDIA, AMD, TSMC often have much higher multiples because of their current growth and market positions.
So it's not necessarily a bargain, it's priced for the uncertainty.
Exactly. It's more of a distressed value or turnaround play. The stock price going up really depends on them proving the turnaround is working.
Okay. Let's explicitly talk about those risks. What are the biggest hurdles, the things that could derail this whole thing?
Execution risk. Number one, far and away, especially manufacturing execution.
Getting 18A and 14A right?
Getting them right, getting them on time, and making them truly competitive on performance, power, area, and cost against TSMC. Their history of no delays makes this the biggest worry. Remember the Clearwater Forest delay on 18A already? Meeting 5 and 4Y is one thing, but sustained commercial competitiveness node after node is what counts.
And delivering products on time across the board.
Yes, consistent roadmap delivery. Plus, the risk from the restructuring itself. Does it hurt morale too much? Do they lose key talent? Can they actually change the culture effectively? These are big internal risks.
And externally, the competition isn't letting up.
Not at all. AMD and CPUs, NVIDIA and AI, TSMC and Samsung and Foundry, the whole ARM ecosystem chipping away everywhere. It's intense. The IDM 2.0 model itself is a risk potential synergy, yes, but also the huge cost burden of funding R&D and fabs for both design and manufacturing.
Plus broader economic factors.
Sure. The semiconductor market is cyclical. Demand swings, inventory issues, economic downturns can hit hard, especially with Intel's high fixed costs. And geopolitics, the U.S.-China situation, supply chain disruptions, market access issues, that adds another layer of complexity and risk. Balancing U.S. goals with global operations is tricky.
Okay, putting it all together then, what's the long-term investment thesis here? How do you weigh the potential against all those risks?
It really is a balancing act. On one side, huge potential. If IFS succeeds, if they regain CPU leadership, if Gaudi finds a niche, if government support continues, if restructuring works, the valuation upside from current levels could be substantial.
But the if list is long.
Very long.
Yeah.
On the other side, if manufacturing falters again, If IFS fails to win key customers long term, if CPU share keeps falling, if the AI strategy doesn't deliver, if restructuring backfires, if macro or policy winds turn against them, the downside is also significant.
So for someone considering investing, what are the key takeaways?
First, time horizon. This is long term, it won't turn around overnight.
Patience is needed.
Definitely. Second, watch the milestones. Track 18A, 14A, progress yields, performance reports, customer ramps. Watch IFS deal announcements. Monitor CPU market share data. Look for improving gross margins and free cash flow. These are tangible signs.
Okay, what else?
Risk tolerance. This is higher risk than, say, investing in a market leader with a proven track record right now. So diversification is important. Don't put all your eggs in this basket.
So it's really a show-me story.
Exactly. The market is skeptical, hence the lower valuation. If they execute, there's asymmetric reward potential. But execution is everything. Major missteps could be very damaging. The hold rating from analysts sums up that cautious optimism, or maybe just caution.
So maybe wait for more proof points before jumping in.
That would be a prudent approach for many, yes. Wait for more concrete evidence that the plan is actually working on the ground.
It's an incredibly complex picture. Intel is truly at a crossroads, with this unique mix of challenges and opportunities. High stakes, high risks, high potential rewards.
Absolutely. The next, say, 2 to 3 years are going to be decisive. We'll have a much clearer picture then about whether this transformation is succeeding. The outcome is genuinely uncertain, but the impact, either way, will be huge for the industry.
Well, this has been a fascinating deep dive, really unpacking all the layers of Intel's situation. So here's a final thought for you, our listener, to chew on. Given everything we've discussed, the tech, the competition, the government, the leadership, the money, what single factor do you think will be the absolute most critical make-or-break element for Intel over the next few years? Something to ponder. Thanks for joining us on the deep dive.